All right, so let me understand this. You've got the SEC thinking about suing retail investors. You have the SEC thinking about suing a message board, all right, or a forum on the internet called Wall Street Bets. You have Robinhood traders filing suit against Robinhood. You have Elon Musk dumping all this fuel on an already huge dumpster fire called GameStop. You have AOC on the same side of the table as Donald Trump Jr. and Ted Cruz. It's like, oh my God, what the is going on? Everything that's going on is all coming down to one word: GameStop. Let's jump into this. Hey everyone, this is RC Peck, and I want to talk to you about what is happening with GameStop. I want to talk about what a short squeeze is, what it is to short a stock. I also want to talk about, is this really 1999? Is this reminiscent of 1999 and the peak of the NASDAQ 100 when the NASDAQ 100 fell 83%? Or is this something different? And I want to talk to you about how this all matters or could matter to your own portfolio. And then finally, I want to talk about another symbol that Wall Street Bets says they're going to target. Now remember, GameStop, depending on where you would have gotten into it or where you want to do the measurement, is up either 2,000%, 4,000%, or 8,000%. Either way, I want to talk about another symbol they talked about taking from $25 up to $1,000. It has not moved yet, so I want to end the video with talking to you about that. Okay, so let's get into this. GameStop, and actually let me go ahead and bring over, I want to bring over a price chart of GameStop. So here's GameStop right here. And basically GameStop, and to me it has nothing to do with the actual company, but I will talk about the company on the screen here. You have it. So GameStop is a company that honestly resells games, cartridge games. I'm sure it sells some other things, but it's a company probably going out of business. So hedge funds had huge shorts on this company. Right now I'm going to talk about what a short is in a moment, but they were basically betting this company was going to go out of business, and they had huge positions on this. So here's what a short is. And if you look at the screen, you can see that GameStop was down to its 2003 lows down here in 2020. So basically, hedge funds were betting that this was going to go to zero. Okay, a short is where you borrow shares from someone who owns the stock. You pay to borrow them. Right? So let's say you borrow them at $3. Since you borrowed them, you hope the stock price falls to $2 or $1 or zero or just above zero. So then you can buy the stock back, right? So by buying it or borrowing it at $3 and selling it back, let's just say at $1.50, you made 50%. Okay, here's the problem. If you borrow that stock at $3, and it goes to $400, you have unlimited losses on your hand, right? If you borrowed it at $3 and it goes to $6, you're getting hurt badly, but it can go to $9. It can go to $18. It can go to $36. It can go to $72. It can go to $144. It can go to $288. And that's what happens. And so that's called a short squeeze, because all the people who are short, who sold the stock, who didn't own it, but they borrowed it, they have to buy it back. They have to buy it back. And because they're getting hurt so badly, they're willing to pay almost any price. So if you look at the screen here, this is GameStop, and this is one of the most epic short squeezes ever. Not the only one. There have been other ones. Up until this week, one of the biggest ones I ever saw was Volkswagen. And that was another very epic squeeze. But basically what happened is hedge funds got badly hurt. And when you're in a short squeeze, you have to sell whatever you can sell. You have to sell whatever you can sell, not try to get flat with the symbol you're short, but you start thinking, where can I liquidate money? You go sell some S&P funds, or you go have Microsoft, you sell some Microsoft shares. So you go and sell whatever you can to because you're going to be getting hit with margin calls. So you have to raise cash very, very quickly. Okay, so that is what selling short is, and a short squeeze is basically when short sellers are wrong and they're literally getting their margins squeezed the heck out of them. And that's what happened with GameStop. Okay, now the question is, how does this matter? What's going on? Does it matter to you? So I want to refer to my notes over on this screen. So let me just get them over here. So I have them over there. And so I want to talk about this because there's a lot of speculation going on. Is this the top of the market? Is this like 99? And I want to go over those things. And then once I go over those things, I want to bring back up the price charts. Let me just bring back this. I want to bring back up the price charts. And I want to talk about where there may be a next short squeeze. Because on that message board, which is a message board on Reddit. Reddit is an online forum where you can go and talk about in-home rowers or stock investing or option trading, or there are probably a million different rooms or forums you can go into and talk about. So Wall Street Bets is one of those forums on Reddit. And so that forum was talking about how to squeeze short sellers. So to me, what's going on is, first of all, this is a situation where it's about portfolio management, right? So if you had 1% of your account short GameStop, maybe you had a bad month, but you didn't have a bad year and you didn't have a bad decade. If you had a third of your portfolio short one stock, and then the stock goes from $3 to $500, you're screwed. And so really what's going on is portfolio management. How did you manage your portfolio? Right? It's the same thing with any portfolio. And in this case, the hedge funds were the ones that got hurt. One of the things I learned about hedge funds a long time ago is they actually all think alike, regardless of what the names of them are. Long, short, large, small, international, domestic, whatever they call their hedge fund. You'll notice that almost all hedge funds have the same returns year in and year out. So a lot of hedge funds were short the GameStops of the world. GameStop, AMC, BlackBerry. These were all heavily shorted stocks, and those all got squeezed. So hedge funds were getting hurt. So the first thing is, the second thing is, the first thing is portfolio management. The second thing is retail investors are as powerful now as hedge funds or big box advisors, right? I mean, Netscape IPO'd in 1995, right? 25 plus years ago. Since then, the amount of tools that have come out to be able to look at the market, look at an individual stock, know how many shares are short, right? That's not just hedge fund players anymore or billion-dollar portfolios. Anyone can do that today. This is truly what Vanguard and Schwab, or I should say Bogle and Schwab, started in the late 70s. John Bogle and Charles Schwab starting to give power back to retail investors. This has been going on for 50 years, right? So let's see, 45 years. Retail investors are getting stronger and stronger. You don't need to go to a big box advisor anymore. You can literally go on YouTube. Now, there's so much misinformation on there as anywhere else, but the point is you can start to actually learn things where you couldn't before. So the story in here is just how smart retail investors are getting. And, you know, people are probably thinking, I don't need to go work for a hedge fund. I can take my 100 grand and turn it into 200 grand in a year, and then take my 200 and make it 400. So people aren't feeling like they need to go to hedge funds anymore. Okay. The other thing is, I think we're on number 3 now. GameStop was shorted 140% of their outstanding shares. So that seems a little messed up. So if the SEC really does go after people on Wall Street Bets or individual traders, I think they actually have blood on their hands, because they are allow a stock to be 140% shorted. That means if GameStop had 1,000 shares outstanding, 1,400 shares were shorted against the company. Like, that sounds illegal. Apparently it's not, because it happened. But I think what's really happening is people are getting tired of the big box world, right? The Wall Street world. And what has happened is COVID has accelerated this. So this was probably going to happen, but maybe it would happen over 10 years. But because of the shutdown, and because people are home more, and because people are not betting on their teams, their sports teams, so that betting has gone away, people's attention possibly has moved to the stock market. And they're looking at the stock market as a place to start doing that betting, start looking like, wow, I can put some money in there and make $1,000 and it goes to $2,000. Like, they're having that same type of experience. So COVID and the economy in really bad shape, and the bottom 90% of people getting hurt, and people stuck at home, it has accelerated this retail investor kind of taking the power back. And though we may not see another GameStop short squeeze like this, what we're going to see is more and more retail investors taking control back over their money, saying, you know what, I don't need to be at Merrill Lynch or Edward Jones or Raymond James or Morgan Stanley or JP Morgan or Goldman Sachs. Like, in fact, I think I could just buy an index and probably beat them all. So really, so many people are taking back their power and saying, you know what, I can do this on my own. That trend is not going to change. That is not a trend that is changing anytime soon. Like I said, Charles Schwab in the late 70s and John Bogle in the mid to late 70s started the change that we see today. One said, you know what, you can just buy an index and beat everyone. That was John Bogle. And the other one, Charles Schwab, said, wait a second, why are we charging so much? I want to charge a fixed price on commissions. They started this whole thing. Netscape IPOing in 1995 has accelerated it. COVID has accelerated it even more. Broadband and how fast broadband is today has accelerated even more. The iPhone in 2007, when it came out, has accelerated it even more, because now people are on apps, the amount of information, right? They have the supercomputer in their back pocket. So this has always been happening since the late 70s. And we have these periods that accelerate it. And we're in one of those accelerant periods right now because of COVID, because of closed betting, meaning baseball and football and basketball, those aren't on. So all the people who may have been going to those and betting, they have turned their attention collectively to the markets. And that's what's going on. And I don't see that changing anytime soon. Okay, let me jump back to the price charts. Okay, so this was GameStop. The other ones that got pretty big short squeeze, I'll just quickly show them, and then I'll show you the symbol that may, if there is going to be another short squeeze or a huge run up. So this was AMC, again, a company that was going out of business. BlackBerry, again, another company that was going out of business. I mean, these are huge. And again, my attention is over here, seeing these huge spikes. BlackBerry went from $5 to, it's down 41% as I record this. I'm recording this close of market on Thursday. But from its, where I just measured that up to where it was up, let's call it 500%. AMC, and it spikes like that. That's why you see a huge spike like that. AMC was incredible. AMC spiked 875% over what looks like 2 days. And then the big boy was GameStop. And again, from the bottom, from the COVID bottom, I mean, if we took it from the COVID bottom down here, let's just see, from the COVID bottom to the peak was 178 times, 180,000%. If you take it from where it kind of stopped falling here, that $5 up to, say, 462, that was just a mere 90 times your money. That's what a short squeeze looks like. Okay, so now I said that Wall Street Bets was talking about another symbol that it could potentially have a short squeeze again. So I'm going to pull that symbol up here and let's talk about it. So that symbol is actually silver. I'm showing it to you with the tracking symbol SLV. It's a much bigger symbol in size. Its market cap today is $15 billion. GameStop was about a $1 billion stock. AMC was probably a couple hundred. I don't remember what BlackBerry was, but SLV being a much bigger cap. And just think of SLV as a stock, even though it represents silver, or it does its best to track the price of silver. There's probably a 1 or 2% tracking error. So it's a bigger symbol. It's $15 billion before there's any quote unquote manipulation going on. But still, there's a lot of attention on this. It was up today. Again, I'm talking to you close of market on Thursday, up 5.5%, not a big deal. You can't even really tell in here. But a couple things I want to point out to you. If this thing breaks the 26 to $27 barrier. So let's just say it breaks above that $26 to $27 barrier and there is a short squeeze on, this thing would probably immediately go to $48. I mean, it's at about 24 now, so it could easily double to 48. Of course, guys, I'm not giving advice. I'm just talking about what I'm noticing here as a market observer. But again, it's a much bigger, I'm going to call it, it's a symbol, but think of it as a company, right? But you'll know if this thing gets going because it has to break through a pretty good resistance at that $26, $27 range. But then if it does, and if there is a short squeeze, it's very likely it's going to get right to that $48 and pop up there. And man, once it breaks the 48, stuff can get really crazy, especially if there is a short squeeze. One of the things that really had GameStop absolutely cruise higher was the last place you could really protect yourself was at $115. That's the last place where options were being sold at when this whole thing started. So anything above that price, there was no way for someone to buy another option to help themselves or protect themselves if they were short. But notice once it broke about the $40 range, right? GameStop broke that $40 range. It just absolutely exploded higher. And just let's call it 40 for easy math. And let's just say the top was 440 for easy math. So it did an 11x return almost immediately. Of course, guys, I'm not predicting and I don't want to put fuel on the dumpster fire. But there was some talk in Wall Street Bets that another place that there could be another short squeeze setup was in silver. And the number I think that I read was it's going from 25 to 1,000. Anyway, guys, I mean, are they crazy times? They're certainly entertaining times. What matters most is understanding what you should be doing with your own portfolio, right? It's one thing, and then you can just be entertained by this, and that's totally fine to be entertained by it. What you don't want is to get hurt by it. So you don't want to be hurt by this, and watching it and just being entertained by it is great. You definitely don't want to be in front of it. But it's another example of really, again, in my view, retail investors having more and more tools at their disposal and really being able to go head to head with hedge funds. And I think a lot of people are still angry from 2008, the global financial crisis. All those large corporations, no one did a perp walk, no one went to jail. Those large corporations, the hedge funds, the big corporations, none of them got in trouble. And so in some ways, maybe this is a comeuppance against those entities. I don't want people to get hurt. I don't know who was hurt or who wasn't. We can read all the headlines, but again, I think the big news out of all of this is retail investors, that's us, are stronger than ever. They have as powerful of tools as any other industry, hedge fund, big box advisor. And it's really the rising up of the individual, of taking their power back. And this is just one example of how that has happened. Thanks guys for being in my world. If you like this, please hit the like button. And if you enjoyed this video, please go ahead and subscribe and go ahead and look at what other videos we have right there on the final screen. Okay, thanks so much guys, and I'll see you on the next video. Okay, bye.